Good evening. Ira Epstein with your Spider ETF stock market wrap-up. And this wrap-up is for Monday, April 22nd, 2024. Let me start off by wishing all of our Jewish followers a very happy Passover. Now remember, in America, it seems to be a one-night event. And then we might celebrate the end of the holiday with another dinner, but generally it's a one-night event. You eat different, you eat matzah and things like that. But in Israel and other countries, it's 7 days. So keep that in the back of your mind. In terms of market news, and then we'll come back to the markets here, we get the Red Book Group coming out with their weekly update and retail sales data at 7:55. S&P Global Group releases the preliminary April manufacturing and service sector PMIs. That's at 8:45, and that's the prelim, so that's a good number to watch. Richmond Fed will update their monthly manufacturing sector for April on Tuesday at 9. New home sales data for March will be updated Tuesday morning at 9 o'clock, and the API number comes out at 3:30 in the afternoon. So as I said, I wanted to come back to the pricing. We had a nice bounce today. Why not? You know, on Friday, as you know, Israel made its bombing, and then we thought that there might be peace coming. And the rhetoric over the weekend in terms of the dialect of peace, you have to understand what that means. Israel and Iran not going at each other. Are the proxies going to fight? Well, if you get my newsletters, you know that I was writing, expect that to be. And lo and behold, I hit a home run, an A trade. We had two attacks, Syria and Iraq, and the groups, the proxies, obviously, out of Iran. So it's business as usual is the way to phrase that. And I think that both Israel and Iran have reasons not to want to go at each other's throats just yet. I'm being very careful with my wording, just yet. I think it's inevitable. I think they will go at each other, and I think it'll be nasty as can be, but no time right now. Israel's got a mission it wants to do, and I don't think Iran wants to take Israel on at this point in time. They can do it through their proxies and do it effectively that way. So we're going to see continued warfare in Rafah, and you've got to deal with that. As for the market, you know, you had a monster drop on Friday and you had a bit of a recovery today. It was not impressive. I wish I could tell you, boy, I am impressed. This market's on fire. Then I started watching at the end of the day, the earnings coming in. So, you know, I'm watching Cadence and some of the others as they're coming in. Even if they're a beat, the market didn't like them. There was punishments right after they were coming out. And that's because they're not looking at the guidance that's up dramatically. And what does that even mean for a NVIDIA? You got to remember, we're no longer in 60, 70% growth of some of the customers of NVIDIA, the big boys. And if you look at how Intel and AMD are doing, you got to be a bit cautious. So yes, you had a nice $30 bounce. You made back, remember, it was down $80. So you made back, let's call it just over a third of that amount. You came back up in Amazon, but Amazon's developing a double top up here in the 180 area. We got to keep our eye on that. Tesla did terrible, down another $5, and they're going to come out with their earnings, and I can't imagine they're good. I mean, they have taken on, and they are getting displaced in China by BYD, and it's very hard to compete with that. I don't see how they can compete with government funding and a company of that size that can just produce cars cheaper than Tesla can. So does Tesla come out with a Model 2? Do they come out with something else to surprise us tomorrow? Or is it more of the same? If it's more of the same, be a little careful. This stock's not through dropping from the charts. It can go down lower than this, and the question is how low? 120, 110, anything's possible in there. You took out the war premium in the gold market. You took out war premium today early on in the day in oil, but by the end of the day, the futures had recovered with that. All right, what's Friday? Friday, you get your PCE data in the United States, one of the Fed's favorite indicators. In looking at the numbers, I will be shocked if it's a down number. I think it's going to be slightly higher, both on a monthly and yearly basis, as the other analysts do. And I still think that puts the Fed into the hold for longer pattern. We'll see if that turns out to be the case or not. I don't think earnings are as important this week, and I did a piece for Bloomberg on that today, as the market is for the PCE at the end of the week. So we'll see if I'm right or wrong on that. So as I said, over the weekend, I wanted to cover eBay. And as you can see, the market's got a trading top in place, but it comes after the market went from basically $41, $40.50, all the way up to the 53 level and has been backing off a little bit. The pattern in the chart is now a confusing one. Yes, on this chart, you see the lower highs, but you also have higher lows. Do you see them right there? So you've got a market that's narrowing in at this point in time. The market managed to get back underneath the 18-day average of closes. And basically, since it did and broke through these lows, the market has been in a defensive posture. In order for it to be good being back to the bullish mode, you've got to take out right here the 40, I'll give it to you. In fact, let's do it together so we can see the exact price. You want to take out 51.41 and close over the 18-day average, which happens to be right now against that number at 51.40. That will give the bulls an area where they can say, okay, let's try to buy and see if we can pop through these highs with a stop back under the 50 level. That's what I think they would be looking at. Where did you bounce from? The lower Bollinger Band as you came down there. What else? You were oversold and you're getting a bounce. So earnings are going to be very important for eBay. Could they be a surprise? They could. Could they have gotten their act together and getting more business? I can tell you, I watch the marketing because I buy on eBay certain things personally. I just bought headlights for my car. All right, I went to the dealer. I won't tell you the model. And I almost fell over. $4,000 for a pair of headlights to be installed. I got the whole thing done, buying them on eBay and finding a local mechanic for $900. That just shows you the differences on them. And I had read everything, and they said these will work absolutely just like the regular OEMs. And so far, I've had them in the car now a couple of months. They're working just as they should. So, you know, I like those type of products and those deals. Who doesn't? Go out, by the way, if you have a car, a new car, and replace the headlight. Ask them what it costs. I'm not talking the bulb. The headlamp, if it goes, and they do go. They'll leak water, different things happen in different ones. I had it happen, and the car's not on warranty. And I went, oh my gosh, look at this. And by the way, you buy those warranties from the car things that you see on TV, better check. Generally, those parts aren't covered. It's engine parts, transmission, things of that nature. So you got to get smart, and that's why I think eBay's a winner in that. I don't go to Amazon to buy that. I look for the deals on the eBay, brand new and so on. Interesting. Lower highs, lower lows. You can see you're still running on this market. This is why I'm saying, yes, I realize it's oversold, it's under the band. I'm not saying to sell it here. I'm just saying I don't think it has rally power unless we get a surprise announcement of something that Mr. Musk is going to get done to change things. I did read late today that part of the big let-goes that he's doing is the advertising. Remember, he was going to go in the regular advertising? He fired the whole staff. You're not going to do advertising without a staff. So he's getting away from that too. So this company's in turmoil right now. But remember, Tesla isn't made up of just the auto part. So please understand that. It's got the energy, it's got the solar, it's got the battery storage, it's got the chargers. There's a lot that makes up Tesla. But 10, 15%, whatever it is, the auto, it weighs on it. When we look at the gasoline fund, well, it got down cheap enough where I was telling this morning my people that I think this is an area where you've probably gone down low enough now. You've taken out the next wave of the people that got too bullish. You did one back here. I felt that pain, by the way. This is the other one. And I think, you know, now the market could have shook everybody out and we can actually get ready for that May, June, July, and August driving. So that's when I'm thinking we're getting to. In XLF, all right, you got up and you took out a prior high. Now, prior to this move, if we look together here, you will see you had the pattern of lower highs, the lower lows. You were riding the Bollinger Band. You went to the right-hand side, and on the close, you didn't embed. Could this market rally more? Well, you tell me. Watch as we come in here. Now, here we go. One more, and here. Boom. And they caught the shorts. Markets through on that leg of the downside. Doesn't mean the bear leg is totally through, but it certainly isn't here on the chart when you have a lower low and a higher high. In XLI, lower highs, still, you see them? Still lower lows. You move to the right-hand side. You're not embedded. This is where the market has to make its decision. By taking out the lows of today, I think the market's saying it wants to go back down and challenge whatever's underneath it in the band. If it doesn't do that and it takes out this 122.45, you could go back to the 18-day average. In FCX, this is Freeport, and copper was overdue to give you something of a break. Why not? Look where you came from. And I had mentioned this to you here. I said, you lost your reading. I think you're going to be fighting a battle at the 18-day average, and you're doing exactly as I thought. If you had to tell me which way I were, bullish or bearish here, until you take out Friday's highs, the bears have wrestled control of the market. When you come to RSPD, all right, again, you were riding the lower Bollinger Band, you're embedded. This rally probably gets sold at 47.65 as long as the embedded reading stays in place, as traders will look to that 100-day average. If the market gets underneath the lows of Friday, it doesn't have to go there. It can just fight on its own, and you might be headed here to the 45.54. But nothing I'm saying is bullish on this chart. In the home builders, high interest rates do them in. And that's the problem that they're facing right now. They're still facing the high rates. Now, I read today that there's a lot of frustration on people wanting to buy and they can't, and they've come to the conclusion that 7% mortgages are what they're going to have to deal with. We'll see if that shows up. It should. But if it's going to happen, it's got to happen now. We should be seeing it in March as you see new home sales you want to see coming out, April, May, as people go in and they start working with the builders, the permits get drawn. It's a process that takes a little time, and you don't fill it right now. But the permits do have to get drawn sooner or later, and that's what I always keep my eye on. That gives me an idea how the builders are doing. They're the ones pulling the permits. In the XLE, higher lows, higher highs. So this wave down got countered today. And now I take a look and say, okay, so XLE, what is it? It's ConocoPhillips, it's Schlumberger, it's all the people in the energy, the big boys. And the market just ended that downtrend. Now, it did not close strong enough to say, get in and buy it. That's got to happen when you close over the 18-day average of 95.91, the way I'm looking at it. You didn't quite do that, but you ended the down thrust and you're oversold, in my opinion. In the gold market, well, you know where I'm looking for a correction. I always tell you, take a look at that 18-day average of closes. Corrections often go there, especially when you lose the embedded reading. So how much did you miss it by today? I consider it hit. It missed it by 2 cents. The low was 215.14, and the 18-day average 215.12. From my point of view, you hit it, and that's where I think the pros did some short covering and finished at 212.57. They don't have to get at that exact number, but that was the zone that I'm looking at. In SLV, the same thing. You lost the embedded reading here. I kept saying to you last week, I don't think this market's going up. I think you got a problem. You have to go through that high. When you lose an embedded reading, you often, keyword, in quotes, often go to the closest main moving average. I teach this all in my full charting course. We'll talk about this in a minute. As I finish this up, I want to talk to you about that course because I just released it. 45 chapters, 4.5 hours of videos. You see what I do, you do the same thing. Then you join me in the mornings in the morning videos, and I explain it step by step in real markets. Not pinpointing, oh, this one, look how beautiful. Anybody can pick one thing and make it work. How do you do it day in and day out? That you're looking for consistency of analysis. From there, you're trying to make money with that. That is the goal. That's what you're trying to do. As you can see, the market down to the 18-day average. That's all I was looking for. I don't care what it does from there. And the same in the copper. So the work, when you lost that bullish reading in my courses, it teaches you that as you come down in a goal. Now the market has to prove itself. TLT. Well, I'm watching something here. You lost the bearish embedded reading. So unless it gains it back literally right away, here's when you lost it. You started flirting with the loss. Let's go to Friday where you lost it, 21.96. So my work would have said, out you go. The only day you can get it back would be today. It didn't do that. So that means the process is over. The odds favor that before you're going to take out that low, and this is what the odds favor, that you make a run to the closest moving average above you. In UUP, you still have the bullish embedded reading, so I'm still friendly to the dollar. I'm still in the bear camp, or am I? Yeah, fully in the bear camp of FXE. Lose the reading, I step back in the marketplace, I got that. And you put it together, you come up with a game plan. And my game plan for you is if you haven't taken my charting course, I will teach you swing lines, the different moving averages. There's a number of them that I use. You only see here a couple of them. There's more. How I work with stochastics, Bollinger Bands, and then the all-important window envelope. And as I said, the whole idea here is teaching. And the idea here is to give you a format you can build on, and if you want, I invite you, add things to it, take it somewhere. But you're going to learn a discipline with all these, and they're going to get explained. As I said, it's about 4.5 hours of videos. You get the charting software, you get the morning access to my videos, all for 30 days. And I think at the end of it, you walk away with knowledge, and that's all that I could really do. Try to convert my knowledge to you. That's what teaching is about. So you go to iraepstein.com, and under the word education, I'm giving a 10% discount. It's automatic when you go to buy it. It's an introductory price, and I hope you take advantage. You can also click up here. Right at the top, there'll be an icon that'll take you there. Otherwise, iraepstein.com, education. Have a good evening.